Dzień dobry, witam Państwa bardzo serdecznie. Dzisiaj jest 26 kwietnia, jesteśmy w Warszawie i mam niezwykłą przyjemność porozmawiać z osobą, która opowie nam o funduszach absolutnej stopy zwrotu, o kategorii funduszy, która swoje najlepsze czasy, w cudzysłowie, ma już dawno za sobą. Mamy eksperta, który będzie nam w stanie opisać, jak powinno wyglądać zarządzanie funduszem Absolute Return. Matt ma 25 lat doświadczenia w zarządzaniu aktywami, od 18 lat związany jest z Fidelity International i od 3 lat współzarządza funduszem Fidelity Absolute Return Global Equity Fund. Matt, thank you that you are here. I've got easy questions and some difficult ones. So first, when I was asked to have an interview with you, I have checked that your fund was launched in 2020, which is short. I mean, you've got decades of experience in Fidelity, and why you decided to launch a fund in 2020? Why not in 1980, for example?
Well, we've been running systematic equities and franchises similar to this at Fidelity for most of my 18 years at Fidelity. Recently we launched a US research team about 10 years ago. We found now was probably the right time and the sweet spot to expand our capabilities into something a bit more exciting, something where it's quite unique, something that's not often been done well before that we know we can do correctly.
So, what experience you learned from US equity team? I mean, can you somehow implement them to global portfolio?
The building out of the US equity team gave us truly a global franchise. So it was fully Phil operated, full Phil analyst team. I can speak to those analysts on a daily basis, and we have that breadth to build essentially a truly global portfolio.
Okay, what are the main insights behind investment philosophy and the whole investment process? What are the differences in the long equity funds, for example? And do you have any typical for Fidelity alpha seeking identification process that you implemented to the management of your fund?
The underlying process between all of our systematic equity funds, including the Global Absolute Return Fund, is the same. We try to extract the pure kind of idiosyncratic alpha source from our research team and implement that in portfolio construction in different ways. So we've had lots of experience with long-only funds doing this, and now we're doing the same thing on the long-short side. So basically we look at our analysts and whether they have a stock on a buy or a sell rating. We look at whether they've upgraded or downgraded that view. And basically what we're taking is those pure signals out of the research team, using those to identify what we call the highest conviction stocks, and then putting that into a really unique and efficient, in this sense, market neutral portfolio construct.
So high conviction stock can go positive and negative, right?
That's correct.
Okay, so how to explain that comparing to long-only fund, because this knowledge is not popular anymore.
Yeah, so I guess in our long-only funds and with our long-only managers, their opportunity set or their opportunity set is only buy-rated names. So we rate names from a strong buy, neutral, sell, strong sell. So a long-only manager only gets access to essentially half that alpha. So buys and strong buys. What this does is open up the opportunity to clients and to Fidelity to extract the alpha from the sells and the strong sells. So instead of going long buys, I can now go short sells and strong sells. So it gives you much more greater opportunity to extract a bit more pure alpha from the research team.
Okay, so this feature gives you opportunities that are worldwide and can use your knowledge about each company. So how long, in average, you can hold a position? Because it's also, I mean, the specific feature of this fund.
Yeah, I guess that is a very specific feature of this fund to traditional funds you might see in this place. Our analysts have a 3 to 5 year view. Mm-hmm. So what you expect to see in our funds and what you see in all of our funds is we have a holding period of at least 1 to 2 years in the portfolio.
Okay, that's pretty long.
It is pretty long. But that's what we like at Fidelity. We're a long-only house.
So you're not switching the portfolio instantly, immediately, just switching some of the portfolio.
That's correct, 100% correct. You look at the turnover of the fund on average now, if you calculate it as the minimum of the buys and the sells plus the shorts, you're looking at only about 120% turnover per annum, and that's on both books.
Okay, so do you have any approach to ESG factors? I mean, this fund is non-ESG.
No, this fund's not specifically ESG, but embedded in this process in our fund is our research ratings. Fidelity is a big house. We have a lot of ESG investing. We have a lot of ESG research that our analysts follow. And what you find is our buy and sell ratings are highly correlated with good ESG and bad ESG.
So if you have strong conviction to buy, you buy ESG, and if you have, I'm sorry for this question, if you have strong conviction to sell, you sell ESG first, non-ESG?
No, very similar. Our high conviction buy rated names are typically very good ESG rated companies. Because Fidelity likes ESG, we like good ESG names, we want to do good for the world. So you'll find a high correlation between our buy ratings and strong ESG and sell ratings and poor ESG.
That was a difficult question.
Yeah, we don't directly target in this process.
All right. I asked this question because ESG issue is pretty new for the whole industry and pretty new in Poland. This fund is not labeled with ESG, but of course it's being
it's embedded. Yeah, it's embedded in Fidelity and our research system.
All right. So do you have, how popular is your fund? I mean, worldwide?
We've got interest from all over the world, including Australia.
Australia?
Where I'm currently located. So there's interest in Australia with an opportunity to launch a fund there towards the end of this year. We've been speaking to Vienna and Paris recently. Obviously we have the Polish fund and opportunities.
Polish currency.
Polish.
Yeah. And why Polish currency? Do you have any insights why, Dominic and the rest of the crew decided to implement the Polish share class?
I guess that's just to make it easier and more accessible to the market to essentially clients here that would want that kind of exposure. So typically it's a US dollar-based fund, but we're able to convert it to pretty much any currency if it's feasible and economically sensible.
Do you have any other currencies, local currencies?
We've got euro, not local, so we've got. So we've got
euro is not local for us.
Yeah, pound. I guess the question too is what we wouldn't typically do is something like Japanese yen. Okay. Because the hedging costs on Japanese yen are so expensive, it tends to erode any of your.
And in Polish zloty, that gives you additional return.
Yes, that's correct.
Comparing to. All right. When you are based in Sydney and you are running a global strategy, does it make any impact for your job?
No, I've been at Fidelity for 18 years, coming up 18 years. The first 14 were in London. We have a global technology platform.
You're originally from Australia?
Originally from Australia, but worked in London for 14 years. So I have never worked for Fidelity until I moved back to Sydney in the Sydney office. But we have a global research platform. So from when an analyst publishes a rating on their stock, that gets disseminated to all our portfolio managers all over the world at the same time. We also, being running a more systematic process, we have a heavy IT infrastructure and background. So every time research notes get published, that gets pushed through our system. I get to see changes in those ratings, changes in those views, in line with what my colleagues see them in London. We're able to converse on that and decide whether we need to act or do anything.
All right. So, according to your knowledge, because it's very long and a lot of situations you could see by yourself, do you know the most common mistakes that you have to consider when building such a portfolio?
You know what, I think the biggest mistake is people not focusing on what they do best. So in our example, and we can talk about this and we'll see it later in the presentation, we focus our volatility to be all on stock-specific risk because we're a stock-picking house. We like to pick stocks, we're amazing at we do it globally. So all of my volatility and all of my bets are on stock picking. I think where people go wrong is they try to take market timing or style timing bets. And that's kind of typical of potentially of a more of a quantitative process.
But here you're just saying about the mistakes of regular investors.
Mistakes of regular investors, okay, I thought mistakes of people running
portfolio
these
managers,
funds.
because you are running the specific type of strategy.
Mistakes of regular investors are the typical ones: falling in love with a stock, not having access to a broad enough information base, ignoring valuations, just focusing on growth, taking more of a binary and less of a diversified approach, not only in your thought process but your stock picking.
Is there such an issue that you can recommend for your portfolio, like reset the portfolio or something like this? Because there are questions that are coming often For example, you're building a portfolio. You've got, for example, 100 stocks positive, 100 stocks negative, and the performance is wrong. I mean, negative. Do you have such a tool that we reset the portfolio, we start all over? What's your what you do as a portfolio manager?
Yeah, we monitor our portfolio exposures and our performance. We can do it on a daily basis. We get overseen internally by our CIOs and our risk teams on a quarterly basis. And we like to see on a monthly, a quarterly, a daily basis where our performance is coming from. What I like to see is our performance coming from stock picking. When I start to get a little bit nervous or want to ask more questions or dig deeper, is my portfolio performance is coming from other things like a small style bet or a tiny factor bet that might be in the fund. What I want to see is that my portfolio is delivering performance from stock picking and that stock picking capability. We use Bara as a performance analytical tool that decomposes our risk and return into the components that we like to look at it in.
Okay, and how big is alpha and what's the beta in this fund? Can you explain us those terms?
Yeah, okay, so the contribution to tracking error of beta is close to zero. The contribution from return is close to zero. It's the one thing we negate the most, so the beta of the fund typically will be between plus or minus 0.05. So primarily no beta, no market timing in this process. Equally, we don't like taking any style bets or factor bets as well. We're a stock picking house. Again, I don't want my returns to be driven by anything other than, or my volatility other than stock picking.
Okay, as long as this fund is a global equity fund, you've got exposure for different currencies. How you manage that? You take it?
No, we don't take currency views. We're essentially currency neutral. So we're sector neutral, country neutral, industry and currency neutral.
All right, excellent. From your perspective, why absolute return funds are not popular?
You know why? I think
or maybe they are, and we are sitting in the bubble.
I don't think it's that they're not popular. I think they go through different, like every fund and every style goes through different market cycles. So of course they're becoming more popular now because of the inherent risk in the market. A lot of things aren't working, traditional 60-40 portfolios, people are looking for diversification and alpha. But there's periods where, let's say, if the market's rallying 20 or 30% a year.
Maybe my question was wrong, because there are some countries that those strategies are popular.
Yeah.
In Poland, the popularity is very low right now.
I think that sometimes they're hard for people to understand, and the typical market neutral absolute return strategy might be a black box hedge quant fund. And that's a bit scary, and I understand that to anybody. We don't know what's actually moving underneath it. This is very different to that. We have an analyst on the ground saying that stock's a buy, largely, that stock goes into the fund. And we can show exactly how a name gets in or out of the fund. There is no black box here, it's completely transparent. There's actual human beings at the other end. So I think a strategy like this would be more appealing to more people than some of the ones historically.
Okay, and what's the fund performance since the beginning of the year?
As of yesterday, I think we're up 160 bips net of fees year to date. Has been a volatile year.
And 1 year performance?
1 year is just over 11% gross.
All right, so last question that we have to ask, because we are sitting in Warsaw. Do you have any Polish securities or any exposure for Polish stocks?
We currently don't have any exposure in Polish securities, and that's not that we won't. If there's a high enough conviction alpha idea in our fund, there is a name that keeps popping up that we see on our list of high conviction names, Dino. You might be familiar with it.
Yeah.
So that's
high conviction is Dino.
Yeah, it's a very favoured name.
Most of Polish managers say the same.
Yeah, and because, I mean, we look for breadth of opportunity across the world, and obviously you'd expect our exposure to be it's roughly 30% US, 30% Europe, and 30% Japan and Asia. So Poland is on our list of companies that we would go long and short. The only opportunity we would see at the moment, we're not invested in it, is something like Dino.
Okay, nice to hear that you know so much about Polish, because I expected that you will not explain long.
Well, the most exciting thing for me is running a global long short fund is you're not tied to a benchmark. So Poland might be small of MSCI Acqui, but I just want to see a great story to get into the fund. I don't care where it is in the world.
Oh, I expected that you will say that we are negative on some stock, but you gave an example of positive. Okay, excellent. So thank you for the conversation. Thank you for being in Warsaw. My guest was Matt Johnson from Sydney, running Fidelity Absolute Return Global Equity Fund.
Thank you for having me.
Thank you.